Intelligence report for July 30th, 2026 based on the last 24 hours. Overall risk score, 6.5/10. Elevated. Overall opportunity score, 6.0/10. Constructive. Geopolitical and macroeconomics. Status. Pressured. Impact, high. Renewed United States-Iran fighting and Strait of Hormuz risk kept energy elevated. Brent futures printed near $89.4 a barrel and West Texas Intermediate near $83.8 at the late-day cut, with venues still disagreeing on the exact session print. Energy is the live inflation channel into risk assets. The Federal Reserve held the fund's target at 3.5 to 3.75% on 29 July on a 9-3 vote, with 3 officials preferring a hike under Chair Kevin Warsh. Hold is not a free pass. The dissent keeps a higher for longer tail on. Bank of Japan held at 1% with a hawkish lean. Yen spiked enough that markets flagged possible official intervention. Carry trade sensitivity can still hit global liquidity in risk-off bursts. Separate wire noise, Gaza diplomacy claims, migration into Spain's Ceuta, is secondary to the oil and rate stack for crypto beta this cut. Key takeaway: oil corridor risk plus a Fed hold with hike descent is a sticky macro ceiling, even while majors bounced. Monitor: Hormuz transit counts, next Warsh path language, and Brent holding the high 80s zone. General crypto market. Status: stabilizing bounce. Impact: moderate, high. Spot cut: Bitcoin near 64,630 United States dollars, about plus 1.4% on the day. Ethereum near $1,914, XRP near $1.08, Solana near $74. Tape is grinding, not breaking out. United States spot Bitcoin ETFs flipped green on 29 July with about $32.1 million net inflows after a multi-session outflow stretch. Prior reds included about minus 225.1 and minus 240.1 million on 23 and 24 July. 30 July prints were still incomplete at cut with a partial positive total. Treat 29 July as last full completed session. Institutional share of crypto trading hit a reported record about 72%. Wall Street flow is damping the old retail wild swing regime, even while absolute volumes stay soft. Security fail of the day. A fake XRP staking site drained about $8.5 million from retail wallets. Rail stories and scam theater hit the same asset class in one window. Stellar ran its Q2 webinar live 30 July and teed Stellar House Sao Paulo, about 1 week out, plus more Meridian speakers. Calendar/product pulse. Not a price catalyst by itself. Ripple and Metallicus accounts were quiet on X versus Stellar. Overall, bounce after Fed plus ETF green flip, still capped by oil and policy odds. Consider: separate ETF session date from tape noise. Full session flow on 30 July still needs a clean close. Traditional finance plus crypto convergence. Status: mixed fundamentals. Impact: high. Coinbase reported Q2 after the close. Revenue about $1.22 billion, missed estimates. Net loss about $359 million, about $1.36 a share. Shares sank roughly 5% after hours. The same print showed record about 10.3% global crypto trading volume market share, third straight quarter of gains. About 88% of net revenue from non-Bitcoin spot trading, subscription and services about 48% of net revenue. Average USDC held in Coinbase products about $20 billion, and prediction markets revenue up about 106% quarter over quarter. Miss on the top line. Share and Rails mix keep improving. Strategy booked about an $8.2 billion Q2 net loss driven largely by about an $8.32 billion mark-to-market hit on Bitcoin, while saying Bitcoin holdings rose about 11% in the quarter and cash reserves were rebuilt to cover multi-year preferred dividends and interest. Corporate treasury risk is loud. Stack still grew. Coinbase derivatives set 17 August for US 500 equity index perp-style futures. Another TradFi product landing on a crypto venue. Same week backdrop. Morgan Stanley Ethereum and Solana Trusts, MSSE/MSOL, are live on NYSE Arca at 14 basis points with staking link design. Bank distribution keeps expanding even as clarity stalls. Regulatory developments. Status. Pressured. Impact. High. Senate bandwidth stayed on other files. Clarity Act odds of becoming law in 2026 sit near 28% on the main prediction market. Major bank research openly flags fading passage odds as a weight on the crypto outlook. Bipartisan senators floated a revised ethics compromise toward the White House. Process theater continues. Floor path before the early August recess still looks thin. Separate politics. A Senate proposal for a corruption-focused agency name-checked Presidential Crypto Ventures. Headline risk, not market structure law. South Korea advanced a plan to tax crypto. Gains above a low threshold starting in 2027 and floated interim stablecoin rules ahead of a fuller digital asset law. CME leadership warned on tax treatment risk for United States perpetual futures. Product design is racing policy. DEFI and RWA tokenization. Status. Constructive on rails. Impact. High. Aviva investors went live with a tokenized share class of its United States dollar liquidity fund on the XRP ledger after Central Bank of Ireland clearance. Framed as the first major EU public chain tokenized fund approval and a live compliance template. Not a slide deck pilot. Custody stays conventional. The ledger is the transfer and record layer. Global banks ran a roughly $1 million BIS-linked pilot of tokenized money for cross-border payments. Small notional, real corridor experiment. Uniswap protocol revenue nearly tripled after the V4 fee switch, with roughly $325,000 a day reported toward uni burns, and the token firm on the week. Fee switch economics finally showing in live. Flow. Aave floated deprecating dozens of thin reserves and 6 deployments touching about $98 million supplied. Pruning dead liquidity is mature DeFi hygiene. Tokenized gold passed a volatility stress check in research, but under 2% sits as DeFi collateral. RWA supply is ahead of on-chain credit demand. Ondo Finance was reported weighing an acquisition path up to about $500 million. Consolidation heat in the tokenization.
Stack-AI e blockchain.
Status. Divergent. Impact. Moderate. Coinbase claimed leadership in on-chain agentic finance. Most agentic commerce in USDC, most agentic stablecoin volume on Base, and heavy use of its X402 protocol. Agent payments are a real product narrative, not only conference talk. OpenAI cut prices on smaller GPT-class models. Anthropic models were reported to have breached systems in security tests. Capability and security risk rose together. Multilab work found frontier agents can grind research mechanics but still fail original science bar for top venues. Agent hype meets evaluation wall. AI infra and minor equities whipped as a large AI infrastructure book was reported liquidating. Some Bitcoin miners and power names still ripped on. Residual AI capacity bets. Correlation channel. AI equity stress can spill into crypto beta via minor/complex stocks. Prediction markets. Status. Active product. Cold policy odds. Impact. Moderate. Clarity Act signed in 2026. About 28% yes. Crowd still prices miss more than make. Coinbase said prediction market contracts and revenue more than doubled quarter over quarter and crossed about $100 million annualized run rate after a new crypto binaries push. Binance US said it will apply in August for a CFTC-designated contract market license aimed at prediction markets. Licensed PM competition is lining up. Risks. Hormuz/Iran energy shock path into inflation and Fed hike odds. Clarity miss into recess and midterms policy vacuum for United States market structure. Soft retail and ETF month-to-date flows even after a one-day green flip. Corporate crypto equity earnings volatility. Coinbase miss. Strategy mark-to-market loss. Scam and security drain risk on major Rails brands. XRP. Fake staking. Opportunities. Live EU-regulated public chain fund template on XRPL, Aviva, Coinbase Share, USDC, Base Agent Rails, and prediction market mix despite the miss. Spot Bitcoin ETF session flip after heavy late July outflows. DeFi fee switch and reserve pruning as protocol maturation. Bank distribution of ETH/SOL products still shipping while DC stalls. Recommendations. Short term, 1 to 4 weeks. Track full United States spot Bitcoin ETF session closes daily. Do not treat incomplete rows as final. Watch Brent/Hormuz headlines as the primary macro override on BTC bands around $63,000 to $66,000. Follow Clarity Ethics language and Senate calendar only as a binary process risk, not a near-term base case pass. Midterm, 1 to 3 months. Map which EU and United States managers copy the Ireland public chain fund path onto XRPL or peers. Watch Coinbase derivatives, US 500 and bank crypto ETP flows as the real TradFi adoption meter while Clarity sleeps. Monitor Aave deprecation outcomes and Uniswap fee switch durability as DeFi revenue quality tests. Long term, 6 to 12 months. Treat regulated RWA share classes on public ledgers as the core Rails thesis over quarterly equity noise. Agent-to-agent stablecoin settlement, USDC/base/X402 class, is the open AI plus crypto stack to track for real volume. Policy. United States market structure may slip past 2026. Build scenarios that do not require clarity this year. Risk warnings. High risk/structural. Geopolitical energy shocks can reprice crypto faster than ETF flow narratives. Mark-to-market treasury strategies amplify equity and sentiment risk when Bitcoin trends down. Prediction market and perp product growth raise leverage and consumer protection risk if policy lags. Scams targeting major brands, fake staking, fake yield, remain a permanent retail wipeout vector. This cut mixes incomplete ETF rows, venue oil ranges, and after-hours equity reactions. Figures can revise. Key metrics TO watch. Bitcoin band, 63,000 to 66,000 United States dollars into the next full session. United States spot Bitcoin ETF net flow. Last full session 29 July about plus $32.1 million. Confirm 30 July final total when complete. Brent, high 80s United States dollars. WTI mid-80s, label venue if they diverge. Clarity Act 2026 yes odds near 28%. Senate recess around early August. Coinbase after-hours follow-through and USDC held on platform versus the $20 billion average print. XRPL Aviva liquidity share class uptake. Eligible investors. Secondary transfer activity. Fed path. Hold at 3.52. 3.75% with 3 hike dissenters. Next data and wash tone. This is not financial advice. This has been your daily market intelligence report for July 30th, 2026.